Good morning, Chair. My name is Nawa Mata, Director on Zambia State, representing the Chairman. Thank you. Okay.
Good morning, Chair. My name is Trevor Jenga, Managing Director for Zambia State Zisc General Insurance. Sorry.
Good morning, Chair. My name is Sydney Chikuta, Director Finance and Administration, Zisc General Insurance Limited.
Good morning, Chair. My name is Amadeso Zambika, Assistant IT Manager, Zisc General Insurance.
Good morning, Chair. My name is Kuda Ngoma, Deputy Director Marketing at Zisc General Insurance.
Morning, Chair. My name is Achilesha Muvanga, Deputy Director, People Experience.
Good morning, Chair. My name is Sydney Mwanza, Director, Branch Operations.
Good morning, Chairperson. I'm Sylvia Ngulue, Director in charge of Technical Operations. Good morning, Chair. My name is Linda Mtonga. I'm Deputy Director, Risk and Compliance, Zisc General.
We shall have IDC introduce themselves now. Thank you.
Thank you, Honorable Chair. My name is Conroy Mlea, the CEO of IDC.
Good morning, Chair, and good morning, honorable members. My name is Raphael Chipoma. I'm the Chief Finance Officer at IDC. Thank you.
Good morning, Chair. My name is Kaya Siameja, Chief Portfolio Officer at IDC.
Good morning, Chair. Good morning, honorable members. My name is Sombo Kaweza, Head Research and Strategy from IDC.
Good morning, Honorable Chair. My name is Tasha Chongo, Executive Assistant to the IDC CEO.
Good morning, Chair. My name is Moffat Chembela, Technical Finance Officer, IDC.
Looks like we are done with the introductions, and just to warn you that you know this is live on television and radio. This meeting is live, so perhaps you know just to warn you anyway. And before we start, we want to address you in the provisions of the CAP 12. You are under CAP 12. This means that anything that you say here in this meeting will not be used against you anywhere, in the courts of law or anywhere else. But that will depend on whether you are telling the truth. If you are not going to tell the truth, then the same Cap 12 will work against you. So please, before you entangle yourselves in untruths, know that Cap 12 is serious. So with that said, we shall commence our meeting, and we have received your submission. We go ahead with the submission that you gave us to go through.
Thank you, Honorable Chair and Honorable Members. We will start with the document that we supplied to the committee, where we note the audit findings from the Auditor General. I'll start reviewing from page 3, where the first item that the Auditor General noted on our performance was the failure to achieve the strategic plan objectives. In particular, he looked at the strategic plan for the years 2021 to 2023, where the entity had set a market share target of 11% to 20% by the end of the plan, and he noted several anomalies which he addressed on page 4 regarding the strength of the financial base, as well as the objectives to enhance customer satisfaction, and also our objectives to improve operational efficiency and work systems, and finally to enhance levels of motivation, dedication and productivity of the human capital at Zisc General. Our response, Honorable Chair, is yes, we acknowledge the observations of the Auditor General, but we have worked throughout after this. These anomalies were noted to make sure that we now begin to work towards attainment of our objectives under the strategic plan. In particular, is at 31st January 2023, in the published report, it indicated that Zisc GI's market share had improved to 16.4%, which is much closer to the 20% target that we had set ourselves. From page 5, we set out a table where we try to explain to the committee the progress we are making across the various strategic objectives, starting with first the strengthening of the financial base, in particular to ensure that the earnings before interest and tax are not less than 2%. That is the initiative that we have done. So we outlined there how we have performed from 2021 up to 2023 with the EBIT ratios of 5%, 8% and 3%. So these show that we are trying to keep in track. We are actually keeping in track with that first strategic objectives. On page 6, we look at the solvency margins, again looking from 2021 to 2023, where we do have percentages that we are showing moving from 99% to 100% to 110%, which again is moving us towards the capital adequacy ratios that we are targeting. So the primary factor for the lower than expected solvency margins was as a result of our inability to collect government debts. We have GRZ debts which were 21 million and 89 million in 2022 and 2023. We did have debts from KCM of 51 million and Indeni, and really our inability to collect those within the periods that were being studied by the Auditor General is what took those ratios down. So you will notice that in the later pages we will elaborate on our efforts to collect on those statutory debts and government debts. The next strategic objective is really to look at how we enhance customer satisfaction We are zoning on page 6, specific claims within the 21 days, which was not fully achieved. And we have put strategies now and proposals for government business to put deposits initially when we are writing those premiums. And again, after that, we are working. You will notice later on we describe the work we have done with the Honorable Minister of Finance to try and recover government debts and make sure that we are on target. So our customers have responded, and we are doing surveys on the customers to see how we are doing, to see their perception of our business. And also we are working not only with direct customers but also with the brokers with whom we have relationships. So those continue to improve, Honorable Chair, on a year-on-year basis. And those are part of the efforts that we are doing to enhance our customer satisfaction. The other aspects of this strategic objective has to do with the training of our staff. And by the end of Q4 each year, we make sure that our staff are fully trained on all the facets that we require them to do on the customer service front. So for this year, 2025, the training starts in March, which is actually this year. So during the course of this month, we have signed a training program with providers to ensure that that training takes place. So, Honorable Chair, on the page 8, again we describe our how we are trying to optimize the utilization of our ICT platform, which is another area where we really need to enhance in terms of our strategic objectives. So utilization stemmed in the years 2021 to 2023 has been steadily moving from 70% to the 19% that we achieved in 2023. So our SMS platform is 100% operational at the moment. Our customer resource management platform is also being monitored to ensure that the queries that customers put through are attended to, and the utilization of our contact center to answer queries also, it's working well. Currently we stood at 60% in terms of utilization of that platform, and we have deployed 100% these platforms to ensure that customers can reach us on our customer portals, including our mobile apps. So these are areas where we continue to invest, and also not only in training but also in upgrading our platforms. On page 9, we talk about our information systems which have been implemented and resolved with our suppliers to make sure that we are compliant in terms of the international financial reporting standards, specifically IFRS 17. So we are working and training our staff, and we hope that by the end of this quarter, 2025, that training will be achieved. And all the other missing requirements we are addressing to make sure that we are compliant as we produce our finances. This is to answer our strategic objective, which is aimed at improving operational efficiency and work systems under our strategic plan. The objective, Honorable Chair, is to automate many of our processes which are currently manual as far as possible, and these have been partially achieved, but those that we have implemented are fully operational at the moment and functions properly. So attached to that are the attendant policies that the Auditor General noted in terms of our IT policies. We elaborate more, but under our strategic objectives, where the policy framework was below 50%, again, we are doing inspections, on an item-by-item basis, moving from one branch to the next, starting with our head office, and we have outlined the branches, the 14 branches that we are on target to be inspected, and those that we have continued to do work to make sure that the upgrading is done. Under that same strategy of improving systems and work processes, we are looking at a change management system which will ensure that the engagement of our staff in the new philosophies that we are implementing is entrenched in our culture. And for this, we are developing a change management program which we hope to be completed, which we aim to complete by the end of Q2 2025. So this is an active program that we are working on. This will encompass also a performance management and monitoring system for our staff, Honorable Chair. The last part of our strategic objective is to see how we can enhance levels of motivation and productivity in our human capital base. These are employees. So it started with these training programs which I've described earlier, and we continue to work on this so that the remaining 25% we can make sure that that training takes place. We are working steadily under our structures to harmonize our pay structures in line with the Emoluments Commission recommendations, and these started in the year 2024. We have a structured program to work with them, and basically our emoluments are aligned with what is recommended there. So we continue to follow the law to ensure that the structures that we're implementing are fully aligned. Honorable Chair, those are the comments on our strategic objectives, but you will notice that they do come out steadily in the other comments that the Auditor General has made, and we have given a little bit more detail on the actions there. The next aspect under page 11 was where the Auditor General was comparing our budgeted revenues with the actuals that we achieved for those years from 2021 to 2023, and we are now on page 12, Honorable Chair, of the document that we submitted to you. You will notice that during the 3 years up to 2023, we had budgeted revenues of 1.47 billion, and we achieved revenues of 1.7, resulting in a positive attainment of our revenue targets. I'm pleased to note that throughout some of the reviews that we have done in other entities, this is one where this element is a positive result, so I'm sure committee members are feeling good this morning as a result of that. So, Honorable Chair, on page 13, again, the Auditor General is looking at the balance sheet now, starting from page 12 at the bottom, and typically on page 13, you're looking at the impairment of our assets and also the increase in our expenses, and all of that, Honorable Chair, in terms of the increases in the insurance service expenses and the allocation of reinsurance premiums and all the impairment costs. These are the accounting structures that we do. We are required to make provisions on these items when we don't collect on time. So these accounting adjustments will normalize when our collections are done. And we are working very hard to make sure all our written premiums are collected steadily by the entity. Bottom of page 13, we are looking at asset turnover. Again, the asset turnover has improved because of the profitability that has been attained for this entity, which again is a positive element in the performance over the last 3 years, in that this GI, despite all the challenges that we are facing, we have consistently been able at least not to lose money over the last 3 years. So we note we note the comments from the Auditor General, And what we believe is that once we work with government to collect all our written premiums, then we should be able to improve all these ratios where the asset turnover seems to be below what the Auditor General is commenting. On page 15, we are looking at the retention ratios of our written premiums. Again, those ones have steadily gone down from 44 to 36%. This reflects really our challenges in terms of making sure that all our customers are able to stay with us as we provide these services. So also that we can onboard new customers as well. So the company has put strategy in place to make sure that our risk management side and our attention to customers, including those improvements under the strategic objectives for customer retention and training, so that these ones become part of the culture. So the retention level as per the draft 2024 accounts has increased to 42%. From the 36% in 2023. So we believe that we are becoming successful in our efforts to improve these metrics. Honorable Chair, the next few pages looks at the Auditor General examining our capital adequacy ratios, looking at the balance sheet. As you recall, Honorable Chair, under Regulation 24(2) of the Insurance General's Regulation Act number 2022, there are requirements in terms of capital adequacy which we have to meet. And we have been working very hard to try and meet it. Ideally, when these changes occur, it means we need to work very hard to increase our profitability. Failure to do so, it means we need to look for raising more equity to meet these capital adequacy ratios. So we are working on these items from both fronts, and we are working with the regulators to see how we can manage this so that we comply with the law. You will notice on page 19 that we have given details in our response on how this has moved as a result of our organic growth in terms of profitability from 64% to 111%. We are still not yet there, but we believe that we are on the way to meet. So we are working as IDC, and there is a roadmap that we have, Zisc GI has given to the PIA on how we intend to achieve this capital adequacy of 150%. By the end of 2025. So, Honorable Chair, we are working hard to make sure that we comply with the regulations under the Act. On page 20, Honorable Chair, Auditor General noted our failure to collect unremitted premiums from brokers, and that there was apparent inaction against brokers when we had not collected. So he reviewed the data analysis, the age analysis of the dates, and the amounts owed by brokers were 54.4 million in 2023, and they are beyond the 14-day allowable limit. So the root cause for this was the lack of a dedicated unit within this GI for us to make sure that brokers remit these collections on time. And now we have initiated plans, and I'm sure the CEO will elaborate later on how successful that new unit has been. But otherwise, those are the corrective measures that have been taken, is to dedicate a unit for each sector of our customers so that we can collect. The same thing applies on page 21 to the subrogation fees, where again our collections have lagged behind. The same structure has been implemented of making sure that there is a dedicated unit focused on looking at the subrogation fees. The same applies to the bottom of page 22 on the collection of premiums. And on page 23, there is a table which shows exactly who these customers are. And you will note that the majority of these customers relate to government business that we have underwritten. So this is an area where we have worked with the Honorable Minister of Finance to see how this can be addressed. And he has recently advised that most of the entities are funded, and so we should review our structures for extending debts to these entities because they are supposed to pay. So they are funded to pay for these services. So that is the way forward that we are working with the Minister of Finance, and he is helping us to make sure that the arrears are collected on our behalf. On page 24, Honorable Chair, the Auditor General noted the fact that we did not do a competitive tender for legal practitioners. This was because there is an act which prohibits, there's a statutory instrument that prohibits legal practitioners from tendering services. So that's why we had gone direct. But with the advice from the Auditor General, we believe that we have found mechanisms in future where the services for the lawyers then can come under no objection approval from ZPPA. So that will allow us to comply with the procurement rules as well, in response to what the Auditor General has noted on this item. Honorable Chair, page 25 at the bottom, the Auditor General noted our failure to pay statutory obligations on time, typically value-added tax for December 2023, which stood at 29.4 million. So the company had focused on looking at these legacy dates, which was PAYE was the first one that we're looking at so that we pay it off, and also to make sure that after that we have a liquidating mechanisms for all the debts that we are looking at from the statute. So our corrective action now is as of 31st December 2024, the GR's debt which stands at 192 million, out of which 81 million has been verified by the Minister of Finance, and once we collect that with the mechanisms, then we should be able to pay our VAT obligations. So we are working hard with all the government agencies to make sure that we rationalize not only what we owe, but also what is owed to us through a mechanism that allows us to clean up the books of this GI and also balance our indebtedness with government. At the bottom of page 26, Honorable Chair, we do have the Auditor General noting that we did extend loans for the purchase of vehicles which were more than 10 years old, despite the fact that our policies should limit to vehicles less than 10 years old. And we do have an outline of 14 vehicles of 14 employees where we did this and extended it. And the reason for that was that we had in-house limits for the loan systems that we were carrying up to 150,000 kwacha for each vehicle. For the 10-year-olds and below, these vehicles are much higher in terms of price, and that was what was happening at Zisc General. So now the upper limit has been changed. We should be able to comply, subject to affordability by our employees. So these are the corrective actions that we are taking. Having said all of that, the collections in terms of what has been extended out to the employees is being done systematically, Honorable Chair. At the bottom of page 27, Auditor General noted our failure to adopt IC standards and framework. This cuts across several aspects of the ICT operations, We have started correcting all of this in terms of making sure that our IT infrastructure not only has standards, but also that these standards are being applied consistently across all our branches and also at head office. So as we speak, management obtained board approval for the adoption of 2 standards as outlined, ITIL and COBIT, as the government frameworks as of December 2024, and this GI has already started the tender process to get those platforms in place so that we can comply. This applies also to disaster recovery and business continuity mechanisms, where Auditor General noted that there were anomalies and failures to fully implement all of this, especially in the absence of the IT governance framework, which, as we have outlined, has just been approved by our board. So once we adopt, we believe that once we adopt these governance frameworks, we should be in a position to address all these elements that the Auditor General has noted. On page 30, at the bottom, Auditor General was raised the concern about testing our backup structures, and again, in terms of what we have done, we have now a robust disaster recovery and backup and business continuity appliance which has been procured, it's been installed and tested, and it's been commissioned. So we believe that this one has been fully addressed to satisfy the disaster recovery requirements, which should be standard for an organization such as ours. 31, Auditor General noted the use of unsupported databases. Again, our corrective action, Honorable Chair, this was part of our strategic business plan to undertake technology changes, to decommission old systems and to bring in place new systems. And we believe that as we apply these strategies, and under our new strategic business plan from 2024 to 2026, all these items will be addressed. Obviously, part of the limitation that we have had is financing, and as our finances improve, we should be able to fund for this. They are part of the new strategies that we have under our new strategic plan, Honorable Chair. The last item on page 32 has to do with the logs in the database and also the agent's portal, where there were anomalies noted by the Auditor General to make sure that these portals were properly controlled and they are being monitored, and security logs and attempts for people to get into the system all had a record within the IT governance, which is quite important. Honorable Chair, the logs were disabled due to the challenges of disk space on our servers, and we believe that once we install the new servers, which have got sufficient disk space, by the end of this quarter, 2025, all these items will be corrected. Thank you so much, Honorable Chair. Those are the highlights in our report to the committee.
Thank you, IDC CEO. Now the members are free to ask questions. I will start, and there are those members that were not present from the very beginning. I will ask them to introduce themselves as they ask the questions. Thank you. Honorable Nakoka, you have a question?
Yes, Chair. Thank you very much, Chair, and thank you very much, GCO, for that submission. My question is on the strategic business plan, which appears to have run into some serious difficulties almost as soon as it was approved. And you are indicating that one of the major changes that have occurred is the introduction of is it the Insurance Act coming into effect in 2022, and I think some changes in the accounting requirements where you had some major, which had a major impact on some of the objectives of your strategic business plan. So my question really, maybe two questions for now. As an entity that is a major player in this industry, did you have any input in the revision of this act that appears to have brought issues that to some extent you're actually indicating have caused some major industry-wide concerns? That's number one. Number two, how have you been monitoring this strategic business plan over the period? And maybe I can stop there, Chair, for now. We will have follow-up questions after they have given us some responses to these two. Thank you.
IDC.
Thank you, Honorable Chair. I think the first part is looking at the changes to the Insurance Act. The Act broadly seeks to strengthen the financial institutions across the country. It is noted that most of our financial institutions are weak because of lack of adequate capital, which is true because it cuts across not only insurance companies but also the banks. You notice that the capital adequacy ratio across all the banks were also changed. So this is a structural program which speaks to the fact that our banks are too small to support the economy of the country, which by extension even our insurance companies are too small. I think the capacity of Zambian insurance companies, if I'm not wrong, is around $250 million locally, which is not enough for the size of economy that we have. Our economy stands now at just over $30 billion if I'm correct. I hope it has improved further. So the financial institutions and capital deployed to support that is supposed to be also more robust than where it's sitting now. So that's what those changes seek to do. So yes, we did have inputs as players in the industry, and we believe it's a good thing that these are improved. The challenge really is now for us to find the finances to keep up to pace with what is a good action that needs to be taken. On the last part is how is the plan being monitored over the period. We do have several governance structures for our entities. I will speak of the IDC perspective, and then maybe the chairperson of the audit committee, who is a board member here, can comment on the day-to-day management monitoring processes and controls that they have. From IDC perspective, all our entities, they come under what we call a performance management contract each year, where we sign on the attainment of our strategic objectives with targets for each financial year, covering all facets of performance: financial, operational, organizational, and service delivery. So all of those, we do have metrics which we agree and they sign, which are monitored by our portfolio team on a monthly basis, and for which there are discussions as to how performance has been achieved and what other remedies do we need to make sure we stay on track. From there, we do have a board which, for which there is a chairman and various committees which monitor the performance of the entity and support management in delivering on the objectives of any strategic plan. So for that, I will call upon the chairman of the audit committee to explain to the members.
Chairman, please go ahead.
Thank you. Yes, as indicated, we do have various subcommittees that meet at least quarterly or as need arises or requires, but the minimum is that we meet at least quarterly, and we go into more detail than even at the normal board meeting. So in addition to the subcommittee meetings, then we now move into the board meetings to then deal with the various issues. And in dealing with operations, we also deal with specific to the plan and the strategy, and see how we are moving and where we need to change, where the management needs support from us as directors or from our shareholders. So we do have that regular review of our performance. Thank you.
Thank you. Honorable Anakoka, you want to continue?
Just you have sort of highlighted this issue of the stringent over 14 days requirement or arrangement with brokers as probably another issue that has a huge impact on your ability to achieve some of your strategic objectives. How is this challenge being dealt with? Is it suggestive of probably the requirement being unrealistic in your view? Thank you, Chair.
IDC.
Thank you, Honorable Chair. For the details on how this is managed, I'll request the CEO of this GI to give details to the committee.
Zisc CEO, please.
Thank you, GCO, and through the chair. Indeed, the 14 days non-admission of the debt in calculation of capital adequacy requirement is somehow cumbersome to the industry. It comes under the regulations that have been issued by the Pensions and Insurance Authority, as stated in the documents. So basically, these are there's been an approach by the industry through the Insurers Association to address these concerns as an industry. So at the moment, there are ongoing discussions between the market, the industry through the association, and the regulator. I thank you.
Thank you. And the next question, I think it comes from Honorable Mapani. Thank you.
Thank you, Chair. Through you, Chair, we have two questions. The first question is coming from Statement of Financial Position, failure to meet capital adequacy ratio, and this can be deduced from page 231 of the Auditor General's report. And Chair, on this, the implication is quite high, and the failure to meet the capital adequacy requirement ratio makes the company's ongoing concern questionable, as the company may fail to pay its debt when required upon. Chair, the first question is, how realistic is the roadmap which will require you to improve by 38.6% points, seeing that between the year 2003 to 2004, they only managed to improve by 10.6%. Of course, Chair, bearing in mind that in their submission, they have mentioned that the roadmap has been submitted to the PIA to achieve the capital adequacy requirement. So, Chair, we want to find out whether the targets that are set can be attained going by the precedents from the previous years that they only managed to improve by 10%. Chair, I submit, and that's my first question.
Thank you, Honorable IDC.
Thank you, Honorable Chair. For that, I'll request the CEO to give details on to the committee on the plan that has been reached with PIA.
Zisc, please.
Thank you, GCO, and through the chair. Indeed, the company has submitted a roadmap to the regulator. I would like to submit that we are close to the targets that we have set. From the submissions that we have made, we are required to attain 125% by 31st December. And already from our submission, we are on 114.4%. So we want to believe that with all the strategic plans we have in place, we should be able to attain 150% by December, which is the target date. Thank you, Chair.
Honorable Mapani, you have a question, a follow-up question?
Chair, I wanted to go to the next question, but I've seen that Honorable Kampiongo should have a question to ask concerning the previous question I posed.
Honorable Kampiongo, please.
Thank you so much, Madam Chair, and thank you to the IDC for the presentation. Madam Chair, and my sincere apologies to maybe slightly to take the CEO slightly back on the question that was posed by my colleague, Honorable Nakoka, with regards to the failure to achieve these strategic plan objectives. And I've seen, of course, we have done an extensive explanation. But I just had an interest in one of the issues they tried to address, Madam Chairperson, the stringent over 14 days broker. You have explained what you are doing. But if I further ask, do you really think this regulation is realistic in own view? Because I mean, doing something and you are still, getting back to the same position might be not helpful. So, as you appear before us, do you think this regulation is realistic? And maybe, I didn't introduce myself. My name is Stephen Kampiongo, MP, Shwangan constituency, and member of this committee. Thank you, Madam Chairperson.
Thank you, Honorable. IDC, please.
Honorable Chair, the question is very pertinent because, like I commented also in the beginning in the changes to these regulations, they are well intended. The difficulty that we have had as an industry, as a country, is the lack of discipline in this matter of payment of debts. Because if you look across even all the other financial institutions, I think the majority of us in business, we don't seem to respect payment terms when it comes to debt. Even when we take loans, especially from government institutions or government affiliated institutions, for which the perception was that this GI is one, the idea is always not to pay or not to pay on time. We have to struggle to get these debts. So it is well intentioned to try and bring that discipline so that within 14 days, at least when the matter is active after you've transacted, you bring back the money and you settle your obligations. In theory, it should be easy. If you collect the money, you should be able to pass it on to the owner of the money. So in practice, like Honorable Kampiongo has noted, that doesn't seem to be the case according to the business culture in the country. So whereas we don't have any problem with the regulations because it's well intended, we just have to find a mechanism as an industry on how we can develop the discipline to comply. And really that is, for us, that is how we see it. I don't know whether the changing the regulation, making it more relaxed, Will it encourage us to pay? I believe not. I think it's a matter of attitude and discipline for the entire industry, and that is why it's a discussion industry-wide, because that concern is really there, and I'm glad that honorable committee members are fully aware of this issue. Thank you.
Thank you. Honorable Kampyongo, you still have a question?
No, maybe just a small rider. Okay. As I appreciate the explanation, indeed, it's about the reality obtaining, and I doubt that it's more to do with discipline, because you earlier on spoke about the size of the economy, how the banks are also struggling to be in the required standards. When I said realistic, because I mean regulations must be meaningful and applicable and acceptable, because here we are dealing with the reality of the economic factors, and as they play out. That's what I was asking. And it would be prudent if you are saying, because here we make recommendations, not that we'll be able to give you the solutions to your challenges, but it would be important for you to be categorical, because if you leave it, Madam Speaker, I know he's trying to be diplomatic. The culture is one thing, but the reality of the economic fundamentals also is, speaking the different language. So I just thought it could be more clear on this issue, Madam Speaker, because as you know, these the channel of transacting, which we are all aware. I mean, we do these insurance policies from time to time, and they have got these critical players in the chain. So it would be helpful if you were clear on how you want to see these players that you can't kick out, but also they deal with clients. And it depends on how the brokers transact with the end clients, which informs the decision regarding this transaction. So the broker is coming to me, and I'm saying I'm not ready. Give me time. But he's got this obligation that has been couched in 14 days. So it's important that you come out clear on that one. So that the committee can capture it properly in terms of what you would want to see in the industry, in terms of realistic transacting. I thank you, Madam Speaker. Madam Chairperson.
Thank you, Honorable IDC. Please, you are under Cap 12. Just
I'm
tell
protected.
us the brutal truth.
Yes, thank you, Honorable Chair. I think rather than me speaking now, let me ask the CEO to share the industry, I wouldn't say perspective, but the mood in the industry regarding this, so that it becomes a bit more clear to the committee. Thank you.
Thank you, Zisc.
Thank you, Group CEO, and through the Chair. This item in terms of 14 days broker debt is basically a concern when it comes to calculation of capital adequacy requirements, because it's not admissible. Therefore, you have to provide capital for it as an insurance company. So because of the nature of the debt in the industry, most of the insurance companies, if not all, are struggling to provide for this debt in terms of capital. So, Chair, it is a challenge to the industry at the moment, because payment of premiums in this market has also remained a challenge for a long time. So it's automatic that once premium is outstanding beyond 14 days from a broking company, at the time of reporting your capital adequacy requirement, you have to provide capital for it as an entity. So that's a challenge, I submit, Chair.
The mood in the industry is that this should be reviewed, because of the challenges to providing the capital that's required to support it. So that is the mood in the industry. It's being discussed. It's put a big burden on the industry as a result.
Thank you, IDC. Any more questions? Honorable Mapani.
Thank you, Chair. Going by the submissions made by both the IDC Director and the Zambia State Insurance. Chair, to me, I think going by the word the mood, it means the intention is there to change the period. Now, Chair, the question will be, how many days do they think will be necessary for them to achieve this transmission of premium from the brokers? Because to me, from their submission, the 14 days is not adequate. And if it's not adequate and there's an intention to repeal this, so what period are they looking at so that they can be able to perform with them the requirements of the act or regulations? Because at the end of the day, what we're looking for is to correct and move forward. So what period are they looking at? Cheers.
IDC.
Honorable Chair, the member asked a very hard question because it's an active topic at the moment for the entire industry. It's not a matter for this GI itself to prescribe, but it's an active matter at the moment for the entire industry in consultation with PIA as well, because obviously they look at the interest of members and they administer the entire industry. So it is in active discussion. So the industry has not reached a conclusion yet as to what proposals they would like to make with regard to this item. But what we have shared with you is simply the difficulties that the industry is experiencing as a result of the need to provide capital for this item. And in a scenario where the capital adequacy ratio has been further increased, it puts a heavy burden. That's why it's being discussed. So I believe that once all the consultations have been made, then the industry will come up with a position and proposals as to how they see it going forward. And since it's also experiential year-on-year basis, depending on how the industry has performed this year, those proposals may change or may not be put forward. This is the situation. So it is being studied and everyone is contributing to how they see it and how they have applied it and what the difficulties are, so that all this information can be taken into account. I believe once the industry has finished discussing, they may or may not bring proposals for changes, but it is a burden to the industry from a capital adequacy perspective. Thank you.
And how long has this subject been discussed by the industry? How long has it been under discussion?
May I request the CEO of Zisc GI to give those details to the committee.
Zisc, please.
Thank you, GCO, and through the chair. Compliance for this was follows the regulations that were issued by the PI in December 2022. So there's a grace period up to end of 2025 to comply. So obviously, industry started discussing this matter the moment the regulations were issued by the PIA. Thank you.
Honorable Mapani, you still want to ask?
Chair, we'll proceed to the next question. instead of asking question that has to do with 14 days since we have discussed it, I think we just move to the next question, Chair, which is failure to collect unremitted premium from the brokers. Chair, on this question, in the Auditor General's report on page 233, is clearly indicates that from their audit, the company is owed about 54.4 million from the brokers. Now, Chair, we want to find out whether this 54 million which is owed, it includes the interest and the 10% that is enshrined in the instrument that governs them on section 2 subsection section 21 subsection 2 and subsection 1 of the Insurance Act of 2021. The 54 million which the company is owed, does it include the 10% and the interest at the bank lending rate? If so, Chair, then at what point do they think this amount will be corrected? And if the two are not included, the 10% and the interest, then what is happening? Does it mean that the 54% is just the amount owed and there's no interest 10%? If they add the 10%, what is the total amount that is being owed? And what are we doing to ensure that this money is recovered? Chair, I submit.
IDC.
Thank you, Honorable Chair. For that, I request the CEO and his team to give details to the committee.
Zisc.
Thank you, GCO. Through the Chair. Honorable, thank you for that question. The amount that we are indicating here being owed by the brokers of 54.4 million does not include the 10% and the interest at all. It's pure basic premium which we charged. I thank you.
Honorable Mapani.
It's just a final question, Chair, to find out how often the broker and the Zisc meet to ensure that they mentor on this issue of 14 days. Because if we don't do that, Chair, we'll continue talking about this same thing even next year. So how often do they meet to ensure that the issue of 14 days is upheld? Chair, I submit.
IDC.
I would request the CEO to give those details.
Zisc.
Thank you, GCO. Through the Chair, just an omission from the first question in terms of what we are doing to collect this broker debt. Largely, I would make a submission that part of this debt is from KCM and also from Indeni. So we have engagements, follow-ups are being done to collect this money. And aside from that, we've put in the strategic initiative to set up a specific broker unit that is going to handle all broker-related matters efficiently. So that is from the operations side. I thank you. And the question is, how often do we meet? It has to, we are doing this on a weekly basis. We are doing weekly reviews and monthly engagements. I thank you.
Honorable Kampiongo, you have a question?
Yes, Madam Chairperson. Madam Chairperson, just a rider on the question posed by Honorable Mapani. And in the response, they've cited two institutions that are owing through the brokers huge sums of money. And of course, we are alive to the challenges that those two institutions have gone through, being also under IDC like Indeni. My question would be to find out how these transactions are structured in order for them to to be so sure that the money will be recovered, because it's the brokers go to secure this business on behalf of the Zambia State Insurance, and then it ends up in a protracted debt. So meaning Zambia State won't go straight to these companies in terms of recovering the money. So can you share a little bit light on how you are so sure that these obligations will be paid, and how you through your brokers have do you have something like payment plans that have been shared with you, premised on some concrete arrangements from the two companies, ZCCM? You said ZCCM and Inden, and these are under IDC. We would like the CEO to just make a comment also, because you see you are sitting with these institutions that are owing each other through the brokers, and eventually the Zisc. Thank you, Chairperson.
IDC.
Thank you, Honorable Chair. I think for the first part of the question, I would request the CEO to respond on exactly how they go about the collections from the brokers and what the mechanisms are. On the last part of the institution being part of the IDC group, as members are aware, KCM is a mine downstream owned by with which we own through our ownership of ZCCM. So ZCCM is the one that is invested in KCM. So it's not a direct relationship to KCM, but it is indirect through our subsidiary ZCCM. So that is the structure for the KCM relationship. Where we have a direct relationship is, of course, Indeni, which is our entity, which we own 100%, and for that we have a direct relationship. Also, they are being managed through the same structures that we use to manage Zisc GI, which is making sure that they do have a performance management contract each year, which allows them to stick to certain metrics, which would include also how they liquidate the debts that they are owing to several parties, including group companies. Periodically, we do rationalizations across the group. I think several committees ago, we did explain our rationalizations of the Zamtel debt within the group together with Infratel. So we do have mechanisms like that where we operate to make sure that debt swaps are used to secure certain positions of balance sheet cleanup, which would happen in any holding company when you reach levels where you need to deploy such structures in order to ensure these entities look healthy. So those mechanisms are available to us where we do have direct relationships. Regarding the activities for collection of the debts from brokers and how realistic it is for us to collect this money, like I said, I defer to the CEO to give explanations on the operations on ground. Thank you.
Zisc.
Thank you, GCO, and through the chair. Commenting specifically on the KCM debt, our view is that it's something that we are going to collect, because the premium was 2.5 million, 1 million was paid, and we have continued to engage to resolve. Coming to Indian is the same. We are in constant discussion. There is a payment plan in place, and it's active. So, Chair, our submission is that these debts are collectible. It's just a question of time. I thank you.
Thank you. Can we go to the next question? Honorable Musumali. Sorry, I think it's Honorable Munduviri. Thank you.
Yeah, thank you, Chair, and good morning, Group CEO with your team. My name is Brian Munduvile, a Member of Parliament from Porokoso and a member of this committee. My question is comes from page 233 of the Auditor General's report, and this is on failure to collect subrogation fees. A CEO of the report indicates that as of 30th June 2024, the outstanding subrogation fees ranged, between 181 days to above 365 days. And of course, in your response, you indicated that management has constituted a committee to manage subrogation. This committee would want to know, they would want some assurance that these corrective measures that you've put in place on subrogation fees, will address the issues and won't be an issue of discussion if and when you next appear before this committee. So basically, it's just an assurance that this committee will require from you that the corrective measures, will put to bed the issues surrounding the failure to collect subrogation fees. I thank you, Chair.
IDC.
Thank you, Honorable Chair. I think for the details on how we are working day to day to collect, again, I defer to the CEO to give details to the committee.
Zisc.
Thank you, GCO, through the Chair. Failure to collect subrogation fees in terms of our submission is on page 21 of our report. Basically, subrogation is a right held by the insurance carriers to legally pursue a third party that caused an insurance loss to the insured. So basically, this amount comes about whereby we have paid a claim arising from an accident for someone who is maybe insured by another insurance company, or they are not insured. So we have the right to pursue recovery to offset our loss. In certain instances, we are cooperating with other insurance companies. We have an agreement to offset, because there are certain of our clients that will hit into clients for other insurance companies. So we do sit time and again to offset the liabilities between ourselves. Unfortunately, in certain instances, we are not able to trace the third parties, or they don't have the capacity to pay us for the loss that we have paid. So it's an ongoing exercise whereby we are engaging amongst ourselves to try and collect, because, as I said, we have the right to recovery. In terms of giving you the assurance, Chair, these are moving targets. These are moving targets because every day we are paying claims, the figures will go up, the coverage will be done, they'll come down, and so forth. But however, I would like to assure the committee that the measures that we have put in place will improve collection targets. I thank you.
Thank you. Any more questions, Honorable Munduvire?
Thank you, Chair. Maybe I can proceed to the next question, which is failure to collect the insurance premiums. The committee would like to know, basically how you've handled the claims that have been made by those customers who have not paid their premiums. Thank you.
IDC.
Thank you, Honorable Chair. On the premium side, the main issue is that there are many different categories of customers that the entity handles on the premium side. There are those customers who are on a pay-as-you-go. We outlined the various elements on page 23. So there are some where there are insurance credit agreements. There are some who we make demands for overdue clients. We follow visitations. We look at credit agreements and whether those have been breached. We have direct debit transactions. There are quite a number of strategies that we are using, which we try to make sure that all the categories of customers are able to address their specific circumstances so that they can pay on the premium and the underwriting business that we have done with them. So for this, obviously, we do have various teams working with each category of customer now, as we have submitted to the committee to address the need to collect for the business that has been underwritten. Probably overall, the various difficulty with the insurance is that people don't see the value until they have had a calamity, either an accident. And we believe if you don't have an accident, maybe you think you don't have to pay and yet you are covered. So those are the specific items that really come into the insurance business. So like we have outlined, we have several mechanisms that we are using to collect. From the 191 million that was outstanding, we made collections of 47 million. Up to February 2025, you notice that we had 191 million outstanding at 31st May 2024. So out of that, we collected at least 47 million by February 2025. And again, it's a moving target. We write business, then we collect. So these are moving periods. But members will notice that it has been it's up and down, and really I think the needs that we need to make to ensure that this is kept under control is simply paying attention through dedicated teams to collect the premium. And that's the emphasis we have put throughout the strategic period to allow us to have a handle on all of these premiums that are outstanding. Honorable Chair, beyond that, then comes to it would lead us into spending money to collect these premiums through court processes, but we believe that if we can focus on having these dedicated teams, it will really allow us to make sure that our debts are collected much faster and we avoid the need to spend money to actually chase data to collect the premium. Thank you, Honorable Chair.
Thank you. Any follow-up questions on this one?
None, Madam.
Okay, so you can continue, Honorable. You are done, Honorable Musumari. Thank you, IDC.
Thank you, Honorable Chair. For the details on this one, I refer to the CEO to give details to the committee.
Zisc.
Thank you, Group CEO, through the chair. Basically, the cause, as stated in our report, was the upper limit for the loans was not sufficient due to the deterioration of the exchange rate. As you know, most of these vehicles are imported second-hand from outside the country, especially Japan. So when we set a local limit of 150, at that time, the limit may be sufficient, but due to the exchange rate coming into account, then we came short of compliance. However, we have admitted our failure to stick to the condition of service for 10 years. Instead, we looked at the bigger picture of balancing staff motivation and giving them the loan. But we have now increased the upper limit to 300,000 to be able to meet the higher value in terms of dollar terms. I thank you.
Honorable Chair, I think this is a matter that the board can look at, because they're the ones who approve the conditions of service for the staff of Zisc GI. So I believe that the audit committee maybe would like to comment on this item.
Thank you, audit committee.
Thank you, Chair. This is one of those issues that, as a board, we did put management to task, and again, like has been pointed out, this was our own internal procedure, which we then again abrogated, and we were grateful that it was raised and has been flagged, and action is being taken. We've just implored management also as a team that in future, if there is need on our own processes for change, please follow the process, bring it to the board for consideration, and if deemed appropriate, we will amend, as opposed to just changing things arbitrarily. But this one, we have taken note and responsibility for the failure, and we endeavor to avoid such future lapses. Thank you.
Thank you. Any more follow-up questions? Honorable, you have a follow-up question?
Maybe just an expansion. Since this matter was to Thank you, Chair. I think I'm audible enough now. What I was simply saying was that since this matter was something to do with conditions of service, and particularly for the employees, there are not legal implications for these aged vehicles, since the condition states that they should be below 10 years. I am cognizant of the fact that the foreign exchange fluctuations maybe abated the matter, but on the side of employees, there are no ramifications to Zisc Insurance General in far as the abrogation of this condition of service is concerned. I thank you.
IDC.
Honorable Chair, as pointed out by the members, these were conditions of service set by the entity itself as approved by their board. So ideally those should be followed through the human capital administrative procedures as well as the financial procedures at the entity. So ideally if there were deviations to that, then specific approval should have been obtained from the board to put in place such deviations. Those are the normal governance processes, which I believe the chairman of the audit committee has now adequately explained. So ideally, what I understand from the audit committee is that management has been censured for this, and that they've been advised that in future, should they need to deviate on any conditions, they need to pass it through the board approvals. I think that is the confirmation that I heard from the chairman of the audit committee. So those are the ramifications on the management as a result of this failure. That's what the entity has done. I thank you.
Thank you, Honorable Anakoka. You have a follow-up question?
Yes, Chair. Chair, it's in fact on a question that my colleague touched on, Honorable Musumali, which is to do with the procurement of legal services. I had a follow-up question, but Honorable Musumali didn't ask the question. I thought I should let him proceed to the other one. So, Chair, allow me to just ask some question for clarification there. I was looking at this Rule 16 of the Legal Practitioners Rules, statutory instrument number 51. And I'm trying to appreciate why this matter was raised by the Auditor General, because I'm sure the explanation that's proffered here was actually given to the auditors as well. But nonetheless, still this matter found itself in the report as a query. So maybe we can zero in a little bit. The services that were being procured here were debt collection services, which, speaking as a layman, is not a licensed service, restricted service for legal practitioners only. Non-lawyers can also perform debt collection services, Chair, according to my understanding. And when you look at this rule here, the prohibition is very clear on legal professional services. Whilst that procurement appears to be pretty general, you know, it's actually some sort of a retained arrangement that you were entering in here that was nonetheless focused on debt collection. Is it your submission that as long as the service is involving a lawyer, as opposed to what the service actually is, it is excluded from a competitive bidding process, or we can revisit and make a distinction between legal professional services and any other services that you might get from a legally qualified individual? Thank you, Chair.
IDC.
Thank you, Honorable Chair. Indeed, the matters raised by the Honorable Member are quite pertinent, but my understanding as to why there is this statutory instrument is simply because there is a fit lawyer for a fit service, based on experience, based on competence, based on certification in a way. So it's not a service that renders itself to the general procurement processes of competitive bidding. Given that scenario then, is noted by the Auditor General, this particular one was a service level agreement which included debt collection. So it was not simply debt collection, there are other things. So you procure that lawyer and they have several competencies including debt collection. So we are not really just looking at debt collection alone. So this lawyer was to do other things. So that's why it lends itself to that statutory instrument. So that is the reason why. Where the Auditor General noted an anomaly was the fact that in using this statutory instrument, Zisc General still falls under the Public Procurement Act by nature of where it sits, and therefore it should have sought a waiver to apply. Even if they did the right thing to go the route they did, but that waiver was missing in the records, and therefore they would be in breach of the Procurement Act. That's the point that the Auditor General was raising, and we believe that that compliance in future should be able to cure that particular aspect. Thank you, Honorable Chair.
Thank you. And okay, you have a question, Honorable? Please go ahead.
Thank you, Chair. I'm Anthony Kasando, Member of Parliament for Bangolo constituency in Isanfia district of Luapula province. My question is on use of unsupported database. And in your response, sir, you acknowledge that the current core system whose focus period ended after 5 years. And then I was expecting to see a response where decommissioning has taken place and the new system database put in place for usage. But according to your response, the decommissioning has not been done yet. And again, according to you, in the strategic business plan 2024-2026, that is where you are planning to do the decommissioning and the technology migration. And it is 2 years down the line since the business strategic plan was set out, and still you are using unspotted database, isn't it? If that is the case, why has it taken you 2 years to do decommissioning and implement the technology transfer as you are proposing here? Thank you, Chair.
Thank you, Honorable IDC.
Thank you, Honorable Chair. I think the point noted by the member is quite pertinent also. The strategic plan is over a period, and in that period we do have prioritization of the key elements. So by nature of these databases and systems, they cost a lot in terms of investment for this GI. So our objective first is to ensure that there is robust income generation to support our capital expenditure outlays. That is why it was prioritized a little bit later in the plan. In the meantime, the organization uses both the database and semi-manual systems, which it has been using to support the platforms that they are using to manage the customer databases and all the other links. So even though of course upgrading is the goal and full integration is the goal, the very fact that there is prioritization and capital outlays that should be planned and matched during the course of the strategic plan, that's why you see it being put in the years further on in the plan. That was really deliberate. It was not an omission. It was deliberate to generate the funds that are required to be able to do the capital outlays. Thank you so much.
Thank you. You want to?
Yes, Chair.
Okay.
I just want to ask the timeline because 2026 is next year. So any timelines to when this is going to be done? Thank you.
May I request the CEO to give details to the committee?
Zisc, please.
Thank you, GCO. Through the Honorable Chair. The process to start for procurement of a new system, core system, has already been put in place, and it's our intention to procure it this year in 2025. Thank you.
Thank you, Honorable Anakoka.
Thank you, Chair. I seek your indulgence to go back to the issue of procurement of legal services. So maybe two questions, Chair, that I would like to just make a follow-up on, following on from the answer that has been given. The 6.7 million that was paid between February 2021 and November 2022 is indicated as for debt collection services on behalf of the company. So my first question is, are we in a position to give a figure of how much this law firm actually collected on behalf of Zisc? Let me pause there for now, Chair.
Thank you, IDC.
Thank you, Honorable Chair. May I request the CEO to give details? Thank you.
Zisc.
Thank you, GCO. Through the Chair. The figures can be given. Not sure if you want us to give you the figures now through my Director of Finance. Okay.
Thank you, MD. Through the Chair. The figures that I have are not definite, but this is involving, I think, the entire period, 2021 to 2023. We had 65 million GRZ that was collected, so there was a percentage charge that was due to the debt collectors. I thank you. That's GRZ specifically.
What's the percentage?
About 6%. It's about 6% thereabout. I submit. Thank you.
A follow-up question, Honorable Gassan. You are done. Okay. Slip of the tongue. Honorable Anakoka.
Thank you, Chair. My follow-up question, maybe it's more of a comment, because I think with an indication that this debt was all GRZ that was collected, what comes to mind really is, did we need to pay 6 million to collect GRZ debt? Because if there is one client that you should have retained internally to deal with, it would be GRZ, and send the debt collectors to everybody else. So maybe there is still something to revisit when it comes to this agreement with this law firm as far as debt collection is concerned. The legal services where you need to prosecute because the client is completely gone truant, yes, there you need the law firm. But it looks rather too easy at the moment if this is all just GRZ that this firm is writing letters to, you know, and then the money comes in, they collect their percentage. Thank you, Chair.
Thank you, Honorable Anakoka, IDC.
We stand guided by the committee, especially given the details that have been given here. If I calculate, it means we collected 111,986,000 to earn the 6% of 6.7 million. So indeed, if it's GRZ debt, there are other mechanisms we can use to try and collect and also limit the cost. So I think the advice of the committee is well noted and we are guided by it. Thank you so much.
Thank you. And when are you going to use those mechanisms to collect from GRZ?
Honorable Chair, I think as soon as we get out of this room. Thank you.
Thank you. Any further questions? No. The next one. Are we done? Oh, we are done. Okay. All right. We are done for the day, and we want to thank you for your submission and also for the answers that you have given to the committee this morning. You came prepared, obviously, but the committee still wants to see a more vigorous action in the collection of the monies that is still owed to you. For example, out of the 191 million, you only collected 47 million. You have a long way to go. So when do you think you collect the rest of the monies? That is the question. On IDC, please.
Thank you, Honorable Chair. As noted to the committee, we do have several mechanisms we are employing to try and collect all the monies that are owed. The target is to collect 100%. So we are using different mechanisms, structured payments, arrangements with the Minister of Finance for the government debts where he has given guidance. We have dedicated teams for the different categories of debtors which have been set up to collect. And I'm sure that with the audit committee of the board now alive and monitoring all of this periodically for their during their periodic report from management, that the situation will improve. The next time that we meet, the committee will be having some good news.
Thank you. With that, we end the meeting. But before I let you go, remember I conferred the Cap 12 on you. Now we are withdrawing it. As you go out there, as the popular saying goes, you are on your own. Thank you very much.
Thank you, Honorable Chair, and thank you, members.
Was considering the reports of the Auditor General on accounts of the parastatal bodies and other statutory institutions for the financial year ended 31st December 2023, and this is the only witness that was making an appearance before the committee on parastatal bodies. That's for today. But remember, later on in the afternoon, after 14 hours, do make a date with us, as we'll be joining the committee on local government accounts. They'll be considering the report of the Auditor General on the audit of the accounts of local authorities for the financial year ended 31st December 2023, and the witnesses that will be making an appearance before the local government accounts include the Local Government Service Commission and the Permanent Secretary, Ministry of Local Government and Rural Development. All this will be happening later in the afternoon after 14. And so on behalf of my two sign language interpreters, Jason Manda and Chola Kauma, the studio technicians, the studio crew, production crew, I'm Claudette Sindaza Jonga, wishing you a pleasant afternoon.